Hi everyone. Here we are again, YouTubing it. Today, or tonight, as I should say, we're going to be doing Chapter 8, Highlights. Not answering that. Highlights from Chapter 8, and then I'm going to do two small examples, one in this video and one in the next video. I promise short videos tonight. This is a short and pretty easy, straightforward chapter. I think the easiest one in the book. That's just my opinion. The first thing about it is, I have my little highlights here, but I'm just going to talk to you for a few minutes before I get up and stop writing. Stop writing, not stop. At the beginning of the chapter, I have it marked tonight, so I hope that makes things easier. There's really no work that I assigned in the first part from 430 to 439, the first 9 pages. It's not that it's not an important issue, it's about internal control. And if you read the chapter, like I hope you did, internal control are policies and procedures that companies implement to do really 4 things. The main thing is to safeguard the assets. That's number 1. And we're going to talk more about how to safeguard the number 1 asset, and that's cash. Okay, that's what I'm really focusing on as far as the work for this chapter, how to safeguard cash. And also to promote operational efficiency, so things will run smoothly. Kind of promote your employees to get on board with these policies and procedures so you can have operational efficiency. And then from our point of view as accountants, this promotes very accurate, reliable accounting records. So those are the reasons for internal control. It is extremely boring to read about, unfortunately, but it is a necessary evil. So I didn't assign homework in the internal control part, but please read it over and, take a peek. I'm going to talk about a couple of the internal control policies so that we can do work in. And the first one we're going to do an example in just a couple of minutes is called petty cash. And just like the name implies, it's just a little bit of cash money that's put aside for incidental expenses. And we're going to do an example problem. There's a really nice one on page 440, if I can turn to that, for Smart Touch establishes a petty cash fund. And it goes 440 to 442 to create and replenish a fund. Again, I'm going to do problem 832B in a minute, showing you how to do a petty cash fund. The one that they show in the book is also very, very good. Okay. The other thing that they have on page 444, once the petty cash is done, kind of starts on the bottom of 443 into 444. Just the expense that credit cards create for the retail business. You take credit cards from people, all type of credit cards. There's an expense attached to that. The credit card company charges you a percentage, usually between 1.5% and 2.5%, depending. So they show you what to do with the credit card expense. It's really, really easy. So I'm going to let you look at those examples on 444. Okay. The next part talks about the internal control of the bank statement and how the bank statement can kind of force you to look and reconcile your bank statement to your cash account. And you might say, why wouldn't they be the same? There's a lot of reasons. Mostly it's called a time lag. There's different timing to when the bank does things and when the business does things. So there's always going to be a discrepancy when you see your bank statement, and you have to reconcile the two to match. And that's going to be in my second video. That's really, I think, the crux of Chapter 8 is the bank reconciliation. The petty cash is kind of second to that. It's a smaller problem. Bank reconciliation is a little bit bigger. That's why I'm kind of keeping it by itself. So let's see if there's anything else before I go on. In the second video, I'm going to do problem 833B. It's a great example of a bank reconciliation. The one in the book, and I'm going to draw your attention to page 450. The bank reconciliation actually starts the statement on 447, and then they talk about the different terms on the bank statement on 448 and 449. Also on your slides, if you're looking at your slides, Exhibit 8-7. Where's the slide number? Slide is 852 to 854, if you're looking at your slides. There's a great example for Smart Touch Learning, their first bank reconciliation that they have. And what I really like about it is how straightforward it is. It's a great template, which means you can use it when you're doing your homework. And if you look at the bottom, I call that part the cheat sheet, right at the bottom of 850. It's what you always do. The bank balance always has the deposits that haven't been recorded yet, subtracting any checks that haven't been cashed, and adding or subtracting errors. The only problem in this example, it's a great example, but there's no errors. Okay? Errors are the part you have to analyze. Did the error cause cash to go up or down? So in the one I'm going to do, there's an error. So then on the other side, the book balance means the company. You always add anything the bank collected for you, any interest revenue or electronic fund receipts, which means people that paid you electronically. And you always subtract service charges, bad checks, NSF is non-sufficient funds, and electronic payments, any payments you made electronically. And then you add or subtract any errors the company made. Again, this is a great problem, but there's no errors. And errors are the ones you have to decide. Should cash go up because of this error, or should cash go down with this error? And I'm going to explain that more when we get to the error in the second video. Okay, I'm ready for my petty cash example now. So I'm going to turn to page, too far. The first example for the petty cash is on 474, problem 832B. And these are not very long, but I know I have at least one or two. I think it's one in the homework and one in the lab problem, one of the lab problems. I don't have to erase yet. The thing about the petty cash is it doesn't come out perfect in any of these examples. You're going to be short or over. This one happens to be short. So let me go over the problem with you, and then I'll show you the solution. I'll just put that down there and hopefully not trip over it. Okay, so this is about, it's for September. Cool Gyrations, a disc jockey service, creates petty cash fund of $350. They put it in a box, they lock it up, somebody has charge of it. During September, Ruth Morgan, the fund custodian, the person that's taken charge, signs the following petty cash tickets. Every time she takes money out of the box, she makes a ticket, right? And then they're supposed to equal what you've actually spent, and the money left is supposed to be the fund established minus the expenses of the tickets is supposed to be what's left. But in book problems, it's never what's left. It's either short or it's over. So you have to use an account aptly titled cash short or over. Okay, so I'll forget where I put that. This has 5 petty cash tickets, 1 through 5. Labeled postage, office party, 2 boxes of stationery, printer cartridges, and a business dinner. So now that's the tickets that she made. At the end of the month, prior to replenishment of the fund contains these tickets plus cash of $210. The accounts affected by petty cash payments are office supplies, entertainment expense, and postage expense. So they want us to do how much, first requirement 1, how how much cash should this petty cash fund hold before it is replenished? How much should it hold? Well, it doesn't say how much does it hold, how much should it hold? So this is 832B, and the page number is 474. Okay, this is number 1 requirement, okay? So it should hold, right? If it was perfect, it should hold the original $350, right? Minus the total of the payments. So if you add up those 5 tickets, 25, 10, 20, 15, and 65, okay, you get 135. Okay, this is the total tickets. Tickets means the little vouchers that they make out, what this custodian would make out when she pays out the money for the different expenses. So that would mean if you subtract 135 from the original 350, we should have $215, right? Remaining before replenishment on the 30th. So here's the cash that should be remaining, not that is remaining, should be. It says that on September 30th, prior to replenishment, the fund contains these tickets, $135 worth, and $210. So it's obviously short, right? You get the short or over by subtracting what you should have from what you do have. In this case, we should have 210, right? I'm sorry, we have 210, and we should have 215, so we're $5 short. So there's an account for that, and it's going to be cash short and over. So we have to make the journal entry to replenish the funds on the 30th. I think that's number 2 requirement. So we're just going to expense all the tickets. The postage had 2, 25 and what else? Oh no, just had 1, 25. So they told us to use postage expense for 25. We're just going to expense all the tickets. The next one is the office party. Oh, we call that entertainment expense, I'm sorry. Not office party. They told us the accounts to use. Entertainment expense, I'm abbreviating. That's supposed to be entertainment expense. And that is the 10 for the party, that's a cheap party, and 65 for the business dinner. So we can group the entertainment expense, the 10 for the party and the 65 for the business dinner, and we can put them together for 75. So 25 and 75. And then the supplies, we can also group those together. Office supplies, and we had 2 of those. Stationery and printer cartridges. So we had 20 plus 15. You don't have to make individual, you can group them if they're the same kind. So that would be 35. Right? So we have them all now. There's our 135. 25, 75, and 35 equals 135 that she spent out of the fund. Again, she should have 215, she has 210. If it's short, always debit, cash short and over. Helps if I write correctly. And it's for $5. If that was over, you would credit it. If it's short, you debit it, okay? So our cash that we need to replenish is the difference between the $350 that we need to bring it back up to its original $350 minus what we have. And what we have is $210. So we need 140 to replenish. Would have been good if I did that first, but that's okay. That's our cash to replenish. Bring it up to what it originally was, minus out what you have left. We need 140 to bring it back up to 350. So, by taking more cash from our cash account, right, and putting it in the box, we've brought it from 210 up by 140 to its original 350. This is the journal entry to replenish petty cash. This one doesn't ask you to do the journal entry to start it, to open it, but say it did. Just let me erase this part. I'll erase it after. That might help you right now. They don't have this, but say they wanted you to journal entry to set it up instead of asking you this question. You would just, to set it up, you would debit petty cash for $350, put the cash in the box, credit cash. That's to establish the fund. They do not ask that question here. But if they did, that would be the answer. Okay? That's to establish the fund. Okay. So, requirement 3. I'm going to leave what I just did, except I'm going to erase the numbers, because requirement 3 says, okay, they've decided in requirement 3 that they want, on October 1st, they want to increase the fund balance to $425. So they want us to make that happen. So if it's now at $350, we just replenished it here, bringing it up now in the box to $350. They say, well, you know, we want to bring it up higher because we're going to have more expenses. You always keep on replenishing, you know, it'll last longer. So we're going to bring it up by debiting petty cash for the amount we need to bring it up by. So if it was at $350 and they want $425, that's a $75 increase, right? So we want 75 more in petty cash. Again, $350 plus 75, $425. And then we're going to take more money and put it in the box. So credit cash for 75. And this is to increase petty cash from 350 up to 475. And if you had a ledger account for petty cash, it would look like this. You would post on 9/1 for 350 when you established it. And then on 10/1, you would increase it by 75, and its balance would be what you want it to be, 425. So that's a nice petty cash example, and I'll see you in a couple of minutes for the big reconciliation example. Bye-bye.